I got a fever, and the only prescription is more cowbell.
Ooh la la.
Good afternoon, everyone. Captain Lane speaking, and wishing you a safe travels to your crypto destination. For those of you traveling with mice, please securely position your cursor over the like button below and right-click with your favorite finger. For those with touchscreen devices, we ask that you gently press the
Greetings to the crypto community. We are pseudo-anonymous. We are here to smash that like button. We believe this content needs to reach more people like you. We are watching. We are listening. Most importantly, we are liking and subscribing. We are pseudo-anonymous. Expect us.
Hey, Kimmy, baby, I had a book over here in this drawer. You seen it?
You mean a little black book? Oh, honey, I cleaned out those drawers in that whole room and made a big donation to Goodwill. But don't worry, we can get you another one.
Oh, hell no. You're never going to believe what happened to me today at the Goodwill. I found a book of seed phrases, honey. I can get those hair transplants now. Oh.
Go best friend. That's my best friend. Go best friend. That's my best friend. That's my best friend. Go best friend. That's my best friend. Go best friend. That's my best friend. That's my best friend.
If you just stumble across the channel, it's probably because somebody hit that like button before. And for those of you who hit that like button, comment, and subscribe, I just want to say thank you. Thank you very much. Well, it's all right now because anything you do, baby, that's all right. Oh, baby, that's all right.
Some call him the Nostradamus of crypto. His jargon skills have discovered new entire galaxies. He once was engaged to Satoshi Nakamoto's oldest sister. He is the most interesting trader in the world. And today we ask him, what do you do when the market crashes?
I buy more. And I also subscribe to Road Dog Crypto. Trade wisely, my friends.
Ladies and gentlemen,
For your viewing pleasure, welcome the turkey. So welcome everyone to you private members. You guys are supporting the channel over here. I very much appreciate that. And you're adding value to my channel, so I'm giving back some value here. Tonight is lesson 10, Chart School Series Live. Episode 10 tonight. And there is also the Chart School series videos that I did several years ago that go over the basic fundamentals of trading and everything. Tonight we're dipping back into Fibonacci, and I'm gonna present this in a way so that if you're new to this, what I'm going to say, you can approach it and use this. And then I maybe 3 tiers, beginner, intermediate, advanced. And the way I intend to present this is that you can jump right in to start using this. You just don't, it may not click with you about why it works, okay? That's where the other levels come up. And, and in time, it will start clicking with you why it makes sense that these little things would work. But what I'm going to give you tonight, just taking the simple cliff notes that I'm giving you here, I think can radically improve the way that you analyze charts and possibly trade these markets. And we'll be using the Fibonacci, basically just your typical Fibonacci tool with some added levels to it. It saves us a step from having to come over and use 2 separate tools. We could do 2 separate tools and get this other fun one that takes 3 points. Oh wow, another point to figure out where to put on the chart. Just more stuff to add up here. So I've got you on this. All right, so the fib tool right over here. Let's go ahead and grab that out. Chief and Goose says, "This is like that time I scheduled a bar at 8 a.m. algebra class, man. Never again, dude." MG Motor says, "Yeah, bad idea, but I got my coffee now, so it should be okay." I got my coffee too. It won't be that bad. Your eyes will probably only cross when we start getting to the boring explanations of why it works. The first part, just hang on to this and you're good. You're good. I'll make this. Okay, so if we were to go to some place like over here, which is MEXC, an exchange, which, you see me on TradingView, and some of you may not know that, but I assume that most of you do. You can use all this stuff over on exchange. You don't have to have the fancy TradingView subscription, or they do have a free one and all that stuff. And I think they got a sale going on right now for Easter. That's rare, but if you're looking for TradingView, use my link. I think I got one somewhere. But your typical Fibonacci, when you pull it, it doesn't have all these extra little things I've got in. You might say, some people might look at my Fibonacci and say, what the hell is that? That's just it is a bunch of lines, but I only pay attention to certain ones at certain times. It will get into here's your basic one, your basic Fibonacci. When you pull it, and I don't like the way they got this. Can we do this different? Can I just pull the tool over here? They don't have a way where I can change it or add to it that I can see over here. I haven't found it. I'm on MEXC right now. I'm just using theirs. This is what they typically look like on the exchange or on MEXC anyway. A lot of times you'll see them a rainbow color. Oh, we could have went to Deck Screener. Can we do that? Or Dex Tools, one of those. I think I've already adjusted these 2 though, so we might be coming back to the mix. We're just getting an idea about what they look like when you first see them, and opposed to what they look like when I'm using them, because there's some extra things there. Let's go with this one. Just get a chart. I probably already messed these fibs up though.
I did. Okay. Well, they're rainbow colors here. Okay. And that's usually what you start with, and you just get this one little box, right? This little box between 0 and 100, kind of like what we got on Mix C. It goes from 100. That's from pulling from. I think I pull from top to bottom. Where you pull from will depend on which side of if your 0 is going to be on the bottom or if your 0 is going to be on the top, and that'll be important. In just a minute. We're kind of doing a basic recap of Fibonacci tool right now. This one's got prices on it, so it's throwing me off. But here we've got 0 at the bottom, a 23.6, 38.2. Well, these are percentages, so I call them in decimal points, but you can say 50% to 61.8% or 0.618. Most people call them by the decimal, I think, 0.786, and your 100 or your 1. That's typically them. All of these are Fibonacci numbers except for the 50%, the 0.5, and that's just in there, and that ties in with Dow theory, Charles Dow. 50% retracements, which also ties into all your vector candles, ladies and gentlemen, your vector candles. To the what is it? CT? What? The dude with his revamping of old school trading stuff. ICT trading or stuff. A lot of those concepts are not new, but some of the technology that they've got tracking it is kind of new. The ideas are still there, but the 50% retracement for them big old candles and stuff, not a new idea, people. All right, so those are levels that we got, and it's usually just a little box that we pull, right? I'm going to come back over to this area. Now on mine, I've got extensions, and these guys are taken. It's a cheat. It's a shortcut, because and how I got them, to explain for some of you guys that don't know, is that you can use another tool called an extension, and what you do is, and there's two different ways to do this. The way that I'm doing is actually based from here all the way back down there. But this is where you get, those extra little high numbers, the 106, 61.8%, 141.1%, 127. The extensions, that means, what all that means is, you originally get this little box, and that's what we're pulling from. The extensions just give you some levels outside of that. And so that's what we're going to talk about right now for a minute, as this basic concept goes. Okay. So I think the ICT people and all that, a lot of the Forex, the market maker, I've never taken those courses or anything. I just pick up from what I hear them talking about, and it's very similar to what we got here with Fib strategy, right? 3 levels, and so wherever we're taking our measure from an impulse move, from a high to the low, that's our little box, right? That's our current little box that we trade in. And if we were using the basic fibs, it would, just give us little lines through here and that's how we would normally use our Fibonacci, right? Okay, well, the other way is to use the extension, like I just showed you, and we take from those areas. And then we start getting into here's a lower zone and a higher zone. Okay, so what I'm getting at is you got 3 sections, man. You got a bottom section. We're on the main floor. We got the basement and the attic. Okay. What happens here on the main floor determines if we go down to the basement or we go up to the attic, is basically what we try to do with this. Now, Fibonacci, while it is a tool that I think can stand on its own, if you were just to give me, if I only had to choose 2 tools I could use, I would go trend lines and Fibonacci. But it's best none of the tools are best used alone. They're always better when you combine them with something else. And Fibonacci is a great one to combine with everything else that you already know. Your support resistance, your trend lines, especially moving averages, your indicators, RSI, levels, this, that, when you're at those certain areas. Combining it with all the other little tools that you're familiar with, or even the future ones that you will learn, will just make it that much better and easier and more accurate to use, in my personal opinion. I'm just giving you my personal opinions and how I actually use this tool, and it's a little different from some. It's similar, very similar. There's overlaps with harmonic trading theory, with the Gartley patterns and all that. There's overlaps with all that. But And there's you'll find as you use it that it will speak to you in many different ways here. But this is the easiest way that I can explain it. We got our middle ground that we're working on, right? And then we got an this attic area, this upper area, and this basement bottom area. What goes on here can determine if we come down here or not. And definitely getting rejected, making lower lows, and that's just your basic price structure, right? Tells you that 786 will put you on the radar for something like that. Well, all right. And so let me go back over how we pull Fibonacci's. This is just kind of a refresher over some of these things until we get into these juicy areas, all right? So swing low to swing high. You'll hear me say this to get this in your head. Tell me where I need to buy. So when I pull from swing low to swing high, I'm looking for price action as it comes down from this high to tell me where she's going to bounce at. And what she gave me was a deep ass 886 retracement. First, she gave us a 0.5 over here, okay? This is the first thing we're looking for. Like, 0.5, that might be interesting. And this is where it can get probably a little tricky when you are using the fibs, because it unveils itself at the time. At the time we're looking at that gives us a possibility, man, that we have a target up here. Possible. But you can see it did not play out that way. It didn't play out totally that way, right? So we're looking for, whenever we do get a rejection and everything, looking for certain areas. Rarely do we ever bounce off the 236. That's just too soon, right? A bounce off a 236, a 382 Fibonacci area is very strong. A bounce off of a 0.5, that's strong too. No, not technically Fibonacci, but we look at that, okay? So fib-wise, that's where we got rejected at. Now there's some other little techniques. We could pull fibs from here to here and kind of give us an idea, which is saying we could probably go down. I'll say that because we couldn't get past the 786 area, the lower low. We'll get into that. But the basic thing is we found our high, we went swing high to swing low, and then it eventually came back and we did get a bounce off of here, this deeper level. Okay, we did this V-shaped recovery. So now we got a bottom. It's deep too, 886. And a lot of your fib books don't even address that. Anything below 786, some of them don't address at all. This is where we pull a fib from the high to that new low that we got. It's at a level of our fib levels, known retracement area. We did get a bounce off of there, so now that's our new bottom. This is our new high and our new low. And now we want to pay careful attention. Now this is how I use the fibs, and if I can just steal them up here. We had price that was coming down to this area from a 1 to a 0. That's all we do. We pull from high to low, and we're watching this guy. And this is the first thing, and you see me talk about this all the time when I'm gauging the strength of a move. If we got to get up to this 236 area. We got to at least go back up there, or else we're just, we're definitely heading back down to the basement area. Don't want to go to the basement area. But that's on the table if we get rejected there. That or a hopeful double bottom here, or sometimes even a lower high. Those ideas can happen, and you don't quite know exactly unless you got some clues from beforehand. And if we had charts to go over, we can get into that. But that's where the more advanced stuff. This is the simple stuff. Stick with me on this. So it's basically like a thermometer. Think of it as a thermometer and a little stair step. And the higher we get up here, the less likely we are to go to the basement, the more likely we're going to end up going to the attic. But we got to hang around this main floor, and the main thing that we got to get above is this 0.5. But in all technicalities, we're not really bullish till we get past this 618, okay? So this is kind of like our baseline. The 618 is kind of our baseline. You might see in between that zone of 0.5 and 618, but if you're below the 618, then you got a chance to get rejected and at least come back down to your 0, right? So we kind of gauge this as a thermometer just to see how high we're going. And once we get past the 618, it's usually, that's kind of cool. But as a general rule, if we are going to make a lower high, meaning if our price action is going to decrease, the areas to take profit or to short at would be a deep ass 886 retracement. Those are not as common as the 786s. The 786 and 618 are the two typical areas that most people will be looking to short. A lot of bots and everything are traded. It's because it's just a basic rule to short the 618. But sometimes it gets up a little bit more to the 786 area before dropping down. Okay, that's just the rules of the game there. And then you would be looking back to either make a lower low, either come to the basement area, possible, but maybe not as low, or someplace in between. Sometimes you will catch. Okay. We don't know where price is going to go. We can just look, but after you see what is done, after you can see what is done in the history, it gives you a little bit more idea of what it's going to do in the future, and that's where some of these harmonic patterns start coming into play, because these things kind of happen repeatable, and you'll start seeing that. All right, so that was one of the most basic ways that I can use this to help me gauge the strength of the move. And I know what levels that we need to get over so I can stay, if we get above certain levels, we have more of a chance to get some of these higher zones. But if we don't, then we got more of a chance to get some of these lower zones. And then that's what we're kind of just figure out base there. Okay, so that probably threw a lot of people off, and I'm just going over stuff that I've been over before, but we're just kind of doing it. So this one didn't get past our 618, so technically we didn't go officially bullish, and so we did have chances of coming back anywhere between there. Well, technically down here, but usually we would be looking. If we make it to a 618, a lot of times we can catch a higher low, and we looked like we started holding this area until that one day when the Earth fell in February the 24th. We came down to lower areas, but I want you to look at where these lower areas went in relation to this, the 618, the full 618 area. And so it helps us identify the little zones that we can be going to, and we can follow this, and we can keep doing this, and it can help navigate us through the market. Let me turn down the music here. And so that's kind of a general way that I would want to look at. We're trying to draw from here to see how price plays within this range, and also the possibility of it stepping outside of that range, either to the upside or the downside. That coupled with price action, and some other things, indicators and everything can help you navigate that a lot better. Trend lines, especially trend lines. And, we are making a series of lower lows, so you can't get too bullish about that when you're making lower highs and lower lows. You're definitely in a downtrend, and that definitely does spell to the downside too. So hopefully that stuff makes sense. Let's try to get into the question that spurred on tonight's show was from Ryan K, who was, hey, I see that you're home now, Ryan K, and is about finding the targets. And now this is where we start getting into something, a little bit more advanced. So I'm gonna say this. Now we're going to get into the easy cliff notes. Okay. Now I'm going to give you the easy things, break it down easy, where you can just apply this right off the bat to where it will try to help you. And then as we go, maybe we'll start explaining it a little bit more. But for the Fibonacci, you need a swing high and a swing low from wherever you want to draw it from. I'm on Bitcoin right now. And I don't know, do I want to find something working on its way up or something that's working on its way down? Or do I just want a random ass chart to go with? Something like, I don't know, let's take a look at AVAX. That looks just as disappointing, if not more. Okay. Let's come over here and let's start going with something that's getting an upward move. Okay. Let's just, do I have that? Can I do the little bar play thing? Does that work on here? Replay. Can I do that? I don't know how to do all these fancy things with that. All right, screw it. We don't need it. We can just pretend we don't see the stuff. All right, so let's look at a bottom, because a bottom is always a good place to start with a fib, right? And we go from swing low to swing high. And I think this is going to be probably one of the easiest ways to do this. First of all, I guess I should show you the different levels. Well, that's not getting into the easy stuff, is it? I do have extensions on here. Now, the ones that I've got, let me try to be a little bit more organized in presenting this. I get excited to tell you some stuff, and then I get on some stuff on the way there, and I start getting sidetracked. Fibonacci's, the numbers that we're using on here, there's a reason for those numbers, and they're mathematically associated with 0.618 and 1.618. They're all tied to it. The ones that I use on my extensions is I use a 1.272, a 1.113, a 1.1382, and a 1.414, and that would be the ones to the higher side. I also use corresponding ones to the negative side, and that would be, since I got these backwards, a negative 0.113, a negative 0.272, I got a 27, a negative 0.0382, a negative 0.414, and then of course the negative 0.618. Those are added ones that I add to this, and they just make things easier, so I don't have to pull out other fibs and do anything. I can just look and go and know where the areas. And you'll see a lot of other people also have these extensions put on their fibs. It just makes life a little bit easier. In a nutshell, if I could put this in a nutshell, just to give you something that would just help you without you having to understand all the math behind it or any kind of that crazy stuff, because you don't have to, okay? The easiest cliff notes that I could give you for this is if you pull a fib from low to high, and it was from here to this one, all right? And then we do that to see where we could swing low to swing high. Tell me where I need to buy. It tells us where we, where do we need to look for a retracement? And normally it is the 618. It usually is, okay? That's just usually the typical one. That's the one that you'll see everybody talk about. At this point in the market, since we're a little, and it used to be for Bitcoin, but as we've gotten it more into official bull run area, it's been the 0.5. I'm crazy, but it is, okay? And you can see that reflected in history when we backtest it too for major areas. The 0.5, when we're in the bull market for some reason, that's what we respect more than the 618, okay? It's just how it is. You'll get 618 retracements, but you're going to get a lot more of 0.5s, and that's a good sign that we're still in the bull market, okay? So we see that that's where we stuck, and if we know that idea ahead of time, then we know to look for the 0.5 instead of waiting. Why didn't it hit my target at the 618? Well, because she's not doing that as much. 0.5 is what we're looking at right now. Okay, so once we find that we're getting something happening there, you usually see it on the smaller time frames. Go down to 5 minute, 4 minute, or whatever. Now I just lost my place, so we're just going to. Oh man, this happens every time. Where did you go, Fib? There you are. We found you. So going down to the smaller time frame, you can see how the candles react to if it's going to have some support and everything. And maybe your other indicators like moving averages and things like that will be suggesting, hey man, it looks like it's going to catch here. But what we're looking for is market structure, right? If we're looking for a higher high, every time that we're looking for a higher high, I'm going to tell you, without you knowing what it could be, you look at your 0.272 and your 0.113s. Just blindly off the bat, just say, if you're looking for a place to short or a place to take profit, I'm just going to tell you, just blindly, you'll have more luck just blindly going with those than doing anything. How easy is that? So just for the beginners out there, or the people that's kind of new to this idea, just doing that one will step up your game. And that's what I did for a long time until I started figuring out what the hell was going on here. And I still ain't got it all figured out, but it makes a lot more sense now. So, and that also applies to the downside. When you're looking for a lower low on your fibs, projecting a lower low, The 1.13 and 1.272 will take care of you most of the time. Not every time. There are certain search situations it's going to go up to the 414, the 618, and maybe up to a 2.36, which is, do I have you on here? I got you down here. I don't have you on the top. Why not? Well, you suck. So, I mean, there are certain instances where those can come in, but as a general rule of thumb, the 113s will a lot of times be your higher high, or the 1.27s. And just that alone can help you out, because you're wondering, well, how high can it go? How high can it go? Well, there you go. And let's test that idea out. So you can see we didn't quite nail. That has to do with me not pulling my fib down to the top there, and there's still a little bit of a gap. Could that be me, or is that? Yeah, actually it is. So I got a little bit of a gaps there. Pull you down to where you touch that. Make sure you're not going too far over here. Some people might want to use the magnet tool. I don't, but I mean, I don't blame you if you do. Maybe it makes life easy. And it's still not a perfect touch. Still not a perfect touch, and we shouldn't expect it to be a perfect touch. Sometimes it can look like it, right? And it's like, nah, and sometimes it do. But it's a zone. Remember, every one of these lines is a zone. It's a fuzzy little cloud. So if you want to be really accurate about it, you see the people out there that draw these things instead of lines. That's actually a smart move, because it's. The lines depend on who draws them, what exchange you draw them on, where, all that. They'll be different for everybody. Nobody's going to get the exact same number to the penny. Very rarely would that happen. But there are zones, and that gives you the ranges. So off the bat, if you'll just keep that in mind, the 1.113, depending on how you're pulling this thing. On this one, it's the negative 113, because I went from bottom to top, right? And that's going to clue me in as to where my higher highs can be. And you'll see this happen routinely. Now, this one started going on a bull run, so she started doing some other stuff going on there. And then, if you're looking for lower lows, your 786s. So let's go from swing low to swing high. Tell me where I need to buy. And see, well, I got ahead of myself there. We'll go from swing high to swing low. Tell me where price is going to go. That's where will it get rejected? Where do I need to sell or think about, getting out or going short? Where will it pivot? And to find that, we go from swing high to swing low and 786. 786. Sometimes it will go up to an 886. That little nudging higher. A lot of times that means we're getting ready to range a little bit. It can mean some different things, but just know, as a general rule, if you're looking for your lower lows in a downtrend, 786 rejection is usually where you go. Just a great little rule of thumb. How about from this one, swing high to swing low? Where did you get rejected? 786. Wow, that's cool. Kind of like it just keeps repeating that or something, right? Where did you get rejected at? You may not have actually. Yeah, you almost touched it. Yeah, you did touch it. To the very low there. 786 area rejected. Now what happened? Now after this, what happened in the structure? Now this is where I think it's important to keep your other stuff going on too, like your trend lines, man, because we know. Follow trend lines, you get a breakout retest to the upside, right? You make a series of lower highs and lower lows, and then you made a higher low. That's your first clue that, hey man, market structure may be changing. And then once it gets above this high, you know that, hey man, we on to something. So we want to combine all this stuff, but Fibonacci-wise, what happened here? From swing low to swing high, tell me where I need to buy. We got a 618 retracement there. That's a good sign. We bounced above the 618, meaning we're in what territory? We're bullish. And from there, we can, although it this one far exceeded any of our extensions here for this move, right? For this one, we actually came up to a certain fib area. And all this stuff will be more in the more advanced stuff. It's just finding confluence and knowing certain areas to look for certain pools. But the big thing is you're going from lows to highs. That's your main thing that you're doing here. So this one far exceeded what we would have for the fibs we were taking here, but it's where you look behind, look to the bigger pattern, look to the bigger thing to figure out what's going to happen here. We go from this swing high to swing low. Tell me where price is going to go. And we can monitor this little dude, right? 618 areas. That's what she went up a little bit above, but that's what we're counting this one at for this one at the 618. That's what she fell below and everything else. And then she came back and did her little thing. Now, at the very beginning of the show, I was telling you about how I pull from swing high to swing low on an impulse move to gauge its strength, to see how it's going to perform, and what happened there. Wherever she gets rejected helps us kind of figure out where she might find another bottom. And with a lot of this, it's a lot of watching, a lot of measuring. I think we got a full 886 right here. And for every little pull, we're keeping these same little areas in mind to see if there's a reaction there. And if there is, then we know that we at least got something to play within this range and maybe more. I hope this is making sense. It was supposed to make a lot more sense to me. I'm moving on to another section here where I'm going to give you those extension targets and a couple of different ways to get them, okay? Okay? So I'm going to get off the chart. I'm just going to come up here to the blank thing. We're going to pull our fib. And that was high to low. So that would be price coming down to here. High to low, tell me where we're going to go. And I'm going to throw this idea here out at you. Should I do it? I should do it the other way. This will be easier to digest. We got price action. Oh, crap. I am so smooth at doing all this, huh? So we got price action that's coming up here, and then she takes a little dip. Okay, so we got an impulse move. Swing low to swing high. Tell me where I need to buy. Okay, we're going to get back into this. If we bounce off of a 618, okay, there's a lot of things that could happen. We could come up, make a higher low at a 786 from this move, whatever, one of the others, and we could continue down, right? That can happen. However, if we are going to be going up, and we know the general rule, you can just go ahead and look at these two areas off the bat if you don't know any better, right? And if nothing else, you got something there. And I can get into mathematically why the 272 is an important area for that 618. I might do that in a second, but take your measured move. That full length of this little guy. This is called an AB equals CD move. The basics of your harmonic theories seem to fall back to this little guy. And you apply that at the 618 Fibonacci, and that will take you up to this guy, the 1382. And in all technicalities, these are the two targets that you would be looking for a 618. But following just the basic rule of thumb would have got you in on this one to get out, or even if you went, were trying to take a short, be cautious trying to open a short at the pivot points, but that's where a lot of people would use these things. This is called an AB equals CD, and it's a bearish setup. Even though you're looking for a higher target, it's a bearish setup, meaning that you're expecting this pivot to be what do they call that? Something reversal zone, PRZ, pivot reversal zone, or something like that. I think is a technical one. You don't need all these fancy names. That's where it can bounce and go the other way. All right, so what I'm going to do now, I'm just going to, okay, so I think I've kind of given you the basics that if you're in an uptrend, I just want to make sure I go over this. For the new guys at this stuff, so I don't understand this or anything. If you're in a trend, higher highs and higher lows. And usually you only get about 3 of those, right? These things come in 3s, just like in our fibs. We have the attic, the main floor, and the basement. In price structure, you also got a basement, a mid floor, and an attic usually. All right, there's usually three levels, 3 humps in the dump, or 3 humps and then a dump. That's another one of my little sayings there. But as a general rule, and it won't match up because I just drew this, or magically maybe it will. And let me see if I can make this make a little more sense. For the new people, that first move that you get after you just measure it, and that's what we would have from here to here, a pullback, your next higher high is usually a 1.13 or a 272 area. Okay, and then you'll come back again, and then you'll go up again. And now if you left the same fib on there, you might actually see it hit a 618 or a 414 area. That might happen to you. Or you pull a new fib and you look up it, and you're looking at the same things, those same 2 areas for each fib there. As a general rule, that will help you out. Just doing that for it to find the higher highs or the higher lows. Just using the 113s and the 272s on either side of that. Now, if I can explain this in a different way, for the more advanced stuff, now I'm going to give you guys. Now, I think this is what you're asking for, Ryan, and it's like if we bounce. Let me see if I can draw this out. This will probably start getting I don't know, maybe an enlightening for some of you, or it might make you. If we go up and we come back, and this is a 618 retracement. We pull our fib, we got a 618. The 618. I'm going to this is where you guys need to take some notes. Cheat sheet. A bounce out that 618, the targets that you want to look for are going to be your negative 2.272. And I guess I'm going to have to type this one out. And your negative 382. Those are the 2 guys. If you find yourself bouncing, pulling back to the 618, and then those guys are in line. If you're going to make a higher high, there's no guarantees that you will make a higher high, but if you're in a good trend, you haven't made more than three humps, or you're on your first, second, or whatever hump, those are probably your guys. Now, if you're on your 3rd hump, you might be over, okay? You may not have any more to go. It's wild when I see people when they start drawing charts and they just get like all these little things and they're upswing, and I'm like, you don't understand the 3 humps and a dump concept. It's seriously price action. Now, sometimes you can see that on smaller things in a small tight channel, but usually, it's making a bigger picture of this hump and dump. We go by guidelines, thumbs, general rules of thumb. General rules of thumb is what we're working with here. All right, so a 618 retracement gets you there. We're going to go through. I should have just started at the bottom. Let's go down. Let's just go down the ringer here. Deep ass retracement, 786. You bounce off of that. Where in the world can you go to? What could be your higher high on a 786? It's going to be these guys. The 113, the 0.272. In this case, it's the negative 2.72, the negative 0.113. So if you take your notes, I would do that. I'd write down 786. Can take me to the 113. I write pitiful. Or the 1272. Or it's not the 1, it's the 0. I get this stuff mixed up in my head. It's the 1 down here. It's the 0 up there. Negative 0. Negative 0.113 or negative 2.272 technically. So that's if you get a 786 retracement, that's where you can go. And honestly, this is your AB equals CD. You don't even have to do that. You can just remember or measure move. These are one-to-one moves. This is kind of how this stuff works. Flag guys to the upside, you know, they're automatically, before anything happens, they're trying to do something like this, doing a one-to-one at the very top. That's why you don't see them targets hit for a long time. I'm just saying. But an AB equals CD means that we're going from A to B. This is your C pull. This is your C to D wave right here. And that will take you up to the 272 when I get my drawing straight. All right. Yeah, that's what I did. And that's your 1-to-1 move. That's AB equals CD. It's a harmonic move. All right. So now we'll go back to the 618. Let me see if I can get these. Oh yeah. Let's draw you down here. So the targets for the 618, you can also use the same. This is a shortcut method. Sometimes you'll see me do this. I'll just do this and put this at the fib level. For the 618, we already went over that just a second ago, but you're looking at your 272 and your 382. Your negative 0.272 and your negative 382. Those are the targets you want to look for. So hopefully I've showed you guys, for you guys, I don't understand these numbers. I can't remember these numbers. The measure move will help you get that. Okay. Now that doesn't mean that you're going to go up there and hit those. You got to be in a trend. But if your trend is looking for that higher high pivot point, that is where you're going. That's where you see me come out with the nailed it. And they make great targets. The whole thing in my system would be to, you know, try to catch close to this bounce and try to cash out there and find a good trade in there, right? Try to find a good percentage between there, you know. And there's, like I said, there's no guarantee. She might come up. Here's what we could do from this move to here. She may just come up to 786 and roll over, and there we made a lower high. That's what we watch. That's what we're watching for when we pull our fibs the other way. Okay, when we're watching the strength of the move, we're trying to watch it for those and see if it makes a lower high. If it makes a lower high here, well, we're coming back down through here, right? But if it does not, if it keeps testing these guys and it decides I'm going to make me a hyzer high, most likely you're going to hit the negative 2.72 or the negative 382 in this case, or your 1-to-1 measure move put at that Fibonacci area. So doesn't matter if you got somebody saying we're flagging down, we got a falling wedge to the upside, we're going to take this measure move, and however they do it, and you know, you sometimes you see some crazy stuff and they got some target way up to here. I'm telling you something that you will see a definite change on. Try this. AB equals CD, you put at the Fibonacci, don't worry about the breakout. Sometimes they get it right, they don't understand what they're doing. In this theory, you put it at there we were touching that Fibonacci area, the 618. So you can do it two different ways. You can do it by the numbers, by the math, or you can do it by the measure moves. That's the point I'm trying to make, right? All right, so now we did the 0.786, we did the 618. We're going to come down and do the 0.5. This one gets tricky. This one's different. This one's a little different. Now you can definitely still do your 1-to-1 move, and it takes you to a little oddball place above here, and I don't have a fib number up there. We can get one for it, but I don't include it. Anytime that you bounce off of a 0.5, which we start to do now, you got to start paying this special notes on this one. This is kind of our anomaly in the fib thing because it's not technically a fib. The areas that you want to pay close attention to are any areas that end in 0 or 0.5. This should be the 0.5 fib, I believe, if we do our extensions. Is it? I believe it should be. Oh, I don't even have you on there. You suck. Why didn't you just type you in? No, why didn't you just type you in? Or let's prove a point and find out that we're totally wrong. I have no places to put you in. That should be a 0.5. It should be right between the 0.414 and the 0.618. You will find that the zeros and the 0.5s, even if it comes to a 1, any whole number or half number is what you want to look for, mostly for there. But there is also the 2. If I go backwards, oh man, I've got it down here. If this was upside down and we were doing it the other way, not really, but if I can give you a number you can look at, the 1.5s, the 2s, and then this guy, this little oddball. Sometimes a 0.5 can give you a big ass target, 2.236. Doesn't happen often, but sometimes you can use it on smaller moves and see that. Kind of like when we saw the other move that went way above our fib extensions. It's those ideas we will be coming into play there for some of the smaller pools. We'll get to that some other time. Right now, we're just going over the little magic stuff that you can apply now to help your trading right now without getting into all the, well, if it does this and this, without getting all into the nitpicky stuff that we could just, the rabbit hole, okay? We're getting the usable stuff that you can apply now, whether you understand it or not. You can say, I don't know, but it just freaking works a lot of times. That's all you need right now, okay? The understanding will come with the time and playing with it and hanging around and asking questions and stuff. And there's still a lot that I've got to understand about it, okay? So 0.5 is a different one. So you want to pay attention to what price does at any fib level. Any variation of this pull or extension of this pull that ends with the 0 of 0.5. It would be a 1.5, a 2, a 2.5. Well, probably would do 2.236 would be the anomaly. While we're on this topic here, there is a fib level that is not on here that a very popular guru has on their fib area. It's called a 7.07. Sits right in here between the 618 and something 6. And I find it amusing because sometimes I'll see him, take a fib, and I've seen this happen a time or two. And the way he does is really, it's crazy. But he'll pull something and to a fib, normally not the bottom of an impulse move or something, but look, it bounced off the 707. That's an institutional private thing. You only know that if you join my group. The dude doesn't even understand it himself what that is. And I don't use it. I don't find that it's necessary to do that, but just to give you an idea about that. When you square 0.5, because we were just talking about the 0.5, the 50% fib level, when you square the 50%, or do the square root of it, I'm sorry. If you do the square root of it, that is where you get the 707 Fibonacci. Okay, so there might be a relevance there. If you do want to use that one, if you were using that one, you would look at things that end on the 0.5s. Does that make sense? But that's off in rabbit. That's down the rabbit tunnel. We don't need to do that. Let's keep carrying on. We went over the 786, the 618, and the 0.5. And we'll do this one, the 382. So price is, she's come down, she get here, we measure it, she went up here, it bounced, okay? That's where we pulled her fibs from here to here. And she did a little stuff, and a lot of times what you see is a flag. A flag bouncing off a 382 is nice. If it can hold, or even if it does anything else off of this 382, it's nice. That's a strong level to hold. Again, you can do your 1-to-1, AB equals CD. Put that up there, and where does it take you? 618. The 0.618 Fibonacci extension. Just doing the one by one. You don't even have to use your Fibonacci's if you do that. That's what I'm trying to hint at, or the extensions if you want to do the measure move. Okay, you can get there with the measure move, but there's also, it's not just that one, the 382. I would also include the 414 in on that one, just as a, sometimes price doesn't always hit the target. Sometimes a little short. Remember, we talked about these being zones, and I want to go back over that again. Every little line we got here, any little line on the charts, even this one right over here, you don't look at it as it's going to go to the penny. That's not the way to approach this. You got to look at this. That's a cloudy little zone around there. And there's going to be a lot of people front running that to get their orders filled sooner. That's why you don't see them hit as much. And it means that there's more sell pressure there. I'm going to get mine. Woo! I'm going to front run it. Instead of selling it at $104, I'm going to sell it at $103.47. Yeah. Fill my order. I got paid. That's what you see kind of happening there a lot of times. And just more orders wanting to get filled. All right, so we went over the major retracements for the Fib. Now it works exactly the same opposite. Exactly the same opposite, right? So instead, if we had price going up and retracing. Let's say that she does, where did you go, Lion? I lost my brush. Let's say she does this. My mouse works weird. This is our line, and we're coming up, okay? This kind of ties into where we were talking about when we first came on the show tonight. Swing high to swing low. Tell me where price is going to go. Well, now you still got your AB equals CD, right? Now, usually you don't dive from here, go lower. Usually you don't. Just like usually you don't bounce from there and go higher at the bigger 3.8 or the 236, right? You usually come down to the 382. Not always. There's anomalies. It's hellacious move if you bounce from there. Hellacious. And if you did, it would take us way the F down, like to a 2.0 or a 2.236 area, okay? Or a 1. I'm sorry, to a 1. Oh, I'm getting confused. It would take us to a 1. A full 1. It can go from 0 to 1. I told you wrong. It takes you to a 1. No, gosh darn it, I'm getting all mixed up. Before I comment on that, this would be the easiest way to do that. If you're ever in that situation, to do the AB equals CD, just the 1-1 move. You normally don't see that though. That's the main thing. You normally don't see that. Normally what you see is sometimes it may come down and make a, it'll come down to a lower low, like a 1-1-3. Sometimes it will do that automatically. You don't have to pull anything else. But usually you're making a higher low. You're trying to bottom out, because this was, if that is truly your bottom run, it should hold. This should be your bottom. You shouldn't go lower. Some instances you'll find that it does, and that just means then you got to take a whole new pull. If you do come down and make a lower low, well, now you gotta pull your fib there and work the whole thing all over again. Okay. If anybody had that question, but we're saying that right now we bounced off and we're coming up here, and sometimes it takes a while before we move up here somewhere, right? But it's the same thing. We bounce off the 382 and we start losing these grounds again, start coming back down here. Well, guess what? 1-1 move. 382 takes you where? -618. Same thing as the other time. If we went up to the 0.5, same thing. You'd be looking at that point, that the negative 0.5 over here, 1-1 move. To the 618, take it to the -382, just like it did on the other ones. It's taking us to the negatives, the way that we got them set up here on the extensions. The 786 will take you down to the 127 and 113. It's just the exact same things that we had there. Somehow I'm not squaring up as much. Is that my fault or you? That's throwing me off because it's not actually squaring up. It should square up. And it may be something I'm doing. Those numbers are still there. So if you came up here, We bounced, we worked our way up, and we got up here to this 786. Yeah, we could be in line for this 113 or 127 area. Could be, or we could be ranging out. That's when we start monitoring, you know, our new fib, right? That's when we take a new fib. And that's when we go from this low to that one, and then we start monitoring and see what we're doing. If we got to bounce off a 618, well, that's positive, right? That opens us up to, you know, either a lower high, that would suck, or getting back up to these areas, which would be a higher high. And in general, that's a rule. That's just kind of your simple rules of thumbs. And this can get a lot more detailed and a lot more convoluted. Like you can do things within ranges, taking a measurement from some of these fibs to kind of help figure out where you're going to. There's lots of different things that you can do, but the best thing to do is just zoom out, look to the left, and if you got a bigger move, play that one. This is what we're working with, right? There's our 786 retracement right here. And from that, we know that what? Well, we're coming either back down for a higher, hopefully a higher low, or at worst, we're going to make a lower low. That's our two options, basically, that we're looking for. And she wanted to try to keep something here. At this point, after we reach up here to our 786, now we got a bottoms, and you got a choice. You can pull a fib from here to there. There's a lot of things that would be that whole impulse move, and that would give you a 618. You're like, oh, that's hopeful until you lose it. And that's your sign that things are going south when you actually losing it and testing it too many times and not getting a bounce off of it, that you might go lower. So you could pull from there, or you could pull from all the way over here. They're both right. They're both right. Took it a little bit while longer to get to the 618 over here, but I mean, they're technically both right. Fibs are kind of, they overlap and kind of like Legos in a way. It's the best way I can explain it. So either one of those two would help you out there. But losing that 618 puts us in danger, right? And from this move right here, let me see if I can zoom out so we can see the price action a little bit better. All right. And you'll see me try a lot of different things here when I do this. A lot of times you'll see me pull from here to there to that top, and I'm looking over, and I am looking at these areas. I'm looking at the 113s and the 272s. I'm looking at those for possible bottoming areas. And it could be we're in an area right here, this little zone right here, the 1.13 and 272. You see me go through that a lot. Now you can pull this and get some more confluence on some of these others and kind of help you nail some ideas. But the biggest thing to do that I would recommend, do you see over here how we have an even lower low and a higher high, and we're still within range of that? Because we are inside this, kind of like a Russian doll, this little doll's inside this doll. Well, this one's got the outer parameters, right? So we can get more data from pulling from this fib. It would be the most important data, in my personal opinion. I would put more weight on what you get from these fib levels than what you get from the shorter ones. And here you go, you nailed your 886. That's the one that nailed it. Not so much chasing the smaller ones where we saw where it went in between the 1.3 and 1.272. But that is confluence, though. That is confluence. That is a harmonic attribute there. That is something that is telling you we got something going on. Sometimes you just got to zoom out to actually kind of see the clearer picture. And that 886 retracement was the one that nailed it. And that's from the bigger pool. The bigger ones, that would be the simplest one to follow and the most accurate one to follow right there. Just like anything else, getting in like on too tight of a time frame, getting in on the 1 minute nitty gritty when you're trying to do like a swing trade or something like that, it's going to, the more detailed you get into it, there's stuff there, but you can get lost in those details. Okay. When you find yourself getting lost with the details, zoom out, and that will give you a much more accurate answer. So now that tells me we got a very probable bottom here. That was an 886. I colored it wrong. I like to keep mine color coded. And once I see that, no, the 886 is a deep retracement. It needs to hold that, or else it's horrible. But we got our move, so now we can come swing high to swing low, and that's from the very top up to there. And what do you see me do all the time? I get this guy, because that's going to help me monitor this guy. Now, I've also got the options to scale this down, and I do that a lot. And you can do that with fibs. I can scale it down to any of these tops and help me, because they'll all overlap. They'll have something that gives me something. This 0.5 is really pointing toward this area right through here at the moving averages. And even coming down over here, from this impulse move, that was the last high we had before we came down to, this first bottom. Tighten her up, and I can use this one especially to help me gauge the strength of the move, right? And I see that we may be starting to stair step our way up. Hopefully we are. I mean, technically as we're stair stepping our way down, but it looks like we're trying to get our first higher low in. And as long as we can stay above this area, we should be doing kind of good. There's all these different ways to use these, but I find this to be a very effective way for me to gauge the strength of a move and start to catch it a little bit ahead of time before she starts going any other way. But we just come down here. Any of these moves we do, right? So here we go from this bottom. Where do you think that we're going to have that reversal at? Did you not nail that in? What the hell? We're there. Well, you didn't actually touch it. I'm impressed. Well, here's an anomaly to make me look stupid here on TV, but we actually did not come down to that 113. I would have been expecting that. You suck, Road Dog. This system sucks. I mean, usually that's where we go. And here you see that it doesn't work 100% of the time, but gosh darn it, it is awful dang close. All right, let's take our next one. And so we're seeing a little deep. They're not matching up perfect. I take that into consideration. Those little things, like we didn't see that one quite touch the 618. So we're getting some. Should we call it noise? Let's go from here. Where do we direct? 786 area. Now I also want to drive this home. Remember we said it was a fuzzy zone, and also you can consider candle bodies too. So any rejection, even though we wick above that, when it comes to fibs, that's the line we're calling it rejection from. And even if we took our measure move to the downside, you try it two different ways, see what works out best for you. Normally you take it from that Fibonacci move. Maybe you want to take it from the actual candle body. That you experiment with that. I usually find that the fibs are pretty good, but since this is deviating a little bit from the fibs, I might actually in this instance pay a little bit more attention from the measurement from the wick, because they're not exactly nailing our fibs on this one. Like normally they do a really good job of that, right? All right, so for where we are now, we also got, I think it was a 618, 786, a little above a 618. Area that we lost. So we lost this 618 area, and that does puts us in danger of coming back to retest these areas. You can look at it this way. High to low, this is the one where we gauge the strength of it. We get above here, that's good. Stair step our way up. Oh no, we got rejected. You can still use this one to gauge. I mean, all these are support resistance areas, right? And if you're familiar with support resistance trading, you know that you can come down and retest those guys. So you can leave this one on here and still use this fib and still get real good results with it, and a lot of people do. Or you can take the new fib movement from the swing low to swing high, tell me where I need to buy, and then you can apply our AB equals CD type ideas and all those things. Does that make sense? And here we're holding on to the 382 with the possible flag. If this holds, it could be a nice big move to the upside. We're seeing some signs here that you may not be wanting to hold, so you got to wait for your confirmations the way you normally would. Trend lines, moving averages, whatever makes your trigger. We're getting rejected off that 200, so she may have to fight for it if she goes to do it. And a lot of people will be saying, look at the flag to the upside. And if they do that correctly, to put that at the breakout, unless you're paying attention to Thomas Bukowski, who says to put it down here. If you're doing the AB equals CD, you're putting it here at the 382. And that tells us, what is this? AVAX, $25 if this flag plays out. That $25, that's 618 target would, that's what we look for that 382. Let me see. Let me come over to the chat and see what you guys are talking about. That way, if you got any questions, because I've just been chatting all night, and hopefully it's made some sense. I know I went down some rabbit holes. Ryan K says, this is fantastic. I hope I'm answering the question that you had. I think I am. There's some other Fibonacci's definitely have a rabbit hole. We can do some other stuff here too, but the basic stuff that works the best, I'm showing you. I'm showing you the stuff that works the best. I like that Stairway to Heaven pattern you made. Rock and roll, yeah. Stairway to Heaven leads to the pattern. Hey, there's Joe. How's it going, Joe? A parabolic cool, then pull back and dump. Love the Stairway to Heaven. Bottom of the stairway is amazing. Oh, I see what you told. The top is not amazing. Board PC guy says the 707 because you got to go through hell before you get to heaven. Smoking so Gary Payton. Let's see how much of this I know. Smoking some Gary Payton. I've not heard of that one. That makes me wonder. Okay, so I don't see a lot of loving the alpha on the fibs. Nice work. I hope it came across, because I did start getting sidetracked to some stuff that I wanted to put out the easy stuff that would click, that could be applicable, whether you understand the stuff behind it or not. But it's pretty cool. And then sometimes the biggest thing, you, like I said earlier, you don't want to use all this stuff in the vacuum, man. It's good to use tools with other tools. So combine it with other things and you'll be more effective. I think that just goes without saying for everything. Trend lines and moving averages and horizontal support resistance. And I've said this a lot. I would go out and I would label out horizontal support and resistance, and that's the standard, and that's good, and that's traditional, and yes, that's you want to do that. But anymore, I trust my fibs more than I trust how I draw my support resistance. Sometimes the fibs are really opened up a new world to me, and the more I use them, I'm just you'll see me go to them right off the bat sometimes before I even draw a trend line sometimes anymore. And coming from somebody who started out as a pattern trader, I think that says a lot. I still like pattern traders. Patterns, they're just telling you a story. They're just telling you a story about what's happening in the price action in the little channel that it happens. Why are you not working? And it just tells you when things are starting to squeeze together, and when they are, or when they're brought in apart, and those things just kind of, they give you, they help you figure things out. It's not the magic of the shape so much as what's going on with the price action in the story that they're telling inside the pattern. But this one's not about pattern. But I combine all this stuff. I look at all this stuff, and everybody's going to see some of this stuff different. Like I see this from where I was zoomed in. Other people say, "No, man, you're wrong. It's this." Well, it's both. They're both right. This is more local. There's definitely a trend line there. But I love trend lines, man. You trace them suckers back and they'll turn you on to some ideas that maybe you hadn't thought about before. Love them. The point was not to use anything in a vacuum, and that includes Fibonacci's. But if there was just one to use in the vacuum, I would probably go with Fibonacci and trend line. One or the other, whichever I had access to. All right. So Fibonacci is basically it's a way of support and resistance, right? And projecting that, even projecting that. But I guess I should save this to other times, though. if you happen to have, do I have an example? I'm trying to see if I got an example. Maybe I can get one over here. I'm not seeing a good example of what I'm trying to do. What I would say that if you have an area of support resistance somewhere and then you got a fib area that lines up with that, it may not be the exactly one that you're looking for. Does that make sense? No, I mean, I don't want to put it that way either. What the point I'm trying to suggest is the confluence of seeing things. The previous way that you got a previous support resistance area before, which, you know, fibs usually kind of point them out though, really. But if you do see a confluence of that with those support resistance, however you pull a fib, I don't care if you're looking at something over here or something, but if you see it lined up, you probably got something there. Whenever that's where the harmonic things come in, and that's another little rabbit hole that you go down to, which kind of lines up with what we got here. For those of you who don't know what I'm talking about, just to confuse you even more, harmonic patterns, and this is one. This is more. I don't know which one it is because Are you one? Maybe you're not. You should be. They look like this when you see them draw it. I guess this is not one. Or at least not the way I got it drawn. But you'll see these Gartleys, bearish bats. I am not the guy to ask about that. I'm interested in learning on it, and it does interlock with what we went over. It does interlock with what we went over. Let's see. Let me quickly give you some other areas. We went over them earlier, but I want to give you. I'm afraid I'll confuse you guys. I'm afraid I'm giving out too much, or too much at once. Let me see what you guys are saying. MG Motorsports says, it's a good thing I can go back and review this. My brain work. Okay, so yeah, I probably don't want to. This is a wealth of great information. I'm absorbing a lot. I have to rewatch to get the finer points and then use tests to feel comfortable. Okay. Let's do this. Let's see if this can kind of soak in. Because I did cover the basics of kind of how to look at that and how to look at the fibs in the our main floor level, our attic, and our basement, for extensions, and just a cliff note, rule of thumb kind of way to look at this and go about it. I gave you the two best fibs, even if you don't understand how this stuff works at all, that you could start using to look for higher highs and higher lows. And it may not nail it 100% of the time. Nothing will do that. But I would say you got a good 80% or more chance of doing that. I'm just kind of recapping right now. When you do your higher highs and higher lows, these are usually a 272 or a 113 almost every time. Almost. In rare cases, they might be one of the higher fibs. Okay, but if you're looking for targets and you can use that in your trading plan, and you're making the gains, and you got the good risk to reward ratio, then it's worth playing, in my personal opinion. So, look at that. That's a 9 to 1. Depends on where you put your stop loss and everything. But if you pull your fibs out and you see that, my 113 or 1272, there's a nice little trade there from where we bounce from, or AB equals CD. Measure move, even if it doesn't, let's say, what was this the example? Say if we bounced from a 618, but then we just came up to a 786. Can I draw something like that out? Because this is not going to be as accurate when I do it, but say we came up to here and bounced instead of coming up here. You would take that in consideration too. And what what you do a lot of time is you use that for your take profit 1, take profit 2, or you know, when you're early take profits, and that way if you do take, you know, you get in on this move here and you're expecting it to come up to a higher high, we'll make a higher high to 113 or 1272. I guess they're negatives, aren't they? The negative 113 and negative 272, if I'm going to be correct on it. But it doesn't quite do it. It comes up to these areas, and you know, make it a lower low. Well, you've at least got something there, right? And this is not accurate at all, but you could take profits there and then move your stop loss, you know, into profit here, and then you technically have a winning trade, as long as the fees don't get you, which a lot of times they'll find a way to get you. I thought I was in profit. I thought that was how am I now down $3? Freaking fees, slippage, whatever. I don't know what the deal is. Sometimes those numbers don't add up. When you think that stop loss should have got me out in profit, why is it negative 2 cents? I'm mad. That trade was for nothing. So for ABCDs, I do use them a lot. I do have those targets a lot, but I also got some lower targets to hit along the way too, right? And that gives you something, because you don't know if you're going to make a higher low. Sometimes you might get a feel. Would depending on if we're just now coming from a bounce, you know, just the price structure can give you know, if we're coming down from a bounce, well, yeah, we probably do have a nice high. We're probably not going to make a higher low. Probably doesn't mean, you know, we don't know. We just watch it. We watch it. And we have to be constantly adjusting, but we can get a feel and maybe moving averages. There might be some other signs that say, oh, man, we just finished one little range and now we're getting ready to reverse and start on, you know, a reversal in 3 waves. If you want to go by the Elliott wave theory, I just say three humps and a dump, because usually you'll have 3 little levels. And sometimes there are 3 nice levels, and sometimes, you know, which one level make sure you screw this up, bro. Sometimes you'll go up and then you'll do the double top. Those suck. You don't really get that higher high there, but it's probably going to be a 786 or 886. I'm just saying. So it's things we're looking for. Hopefully this has made sense, and what we'll do is try to digest this, and then when I say the same things on my stream every night when I pull my Fibonacci's, you know, I'm trying to give this same stuff out when I talk about them. Maybe it doesn't come across that easy, but just get questions together, and then the next one we can hopefully maybe dive deeper on this and go over a few other things there. Board PC guy says, I'm learning a lot, and yeah, replay value is insane on these. Okay, cool. All the 7s. Uh-oh, got a copycat. How's it going? All right. Now, what do you do in a chopped up market? That's where I was almost going to go into some of that, but I think it would just confuse everybody. The best thing is to zoom out and look at your bigger fibs, in my personal opinion. That's the best answer I can give you as a general rule. So we would probably consider this like chop overall. And you see that we got a bottom here and a top here, and they haven't been extended, so we're within range. And so fib-wise, I would be paying attention to what's going on here. So from swing high to swing low, I'd be looking at my 886, which that's what we touched here. And then for the upside, I'd be doing this high to this low and paying attention to the same little area right there between the 786 and 886. And doing that, I think, helps you kind of nail the ranges. And I should have done the other one too. Where's that little box? This was the 886, 786 would have been right above it a little bit there. We're probably. And so when I get all my stuff off of here, is that bubble? When I get all that stuff off of it, you can see that the bigger one on this one pretty much nailed the range. And your other options, which I think some of you might even find easier, I don't use this as much, but I do like it. I do like it. Your fixed, well, you didn't even line up as well there. Would you be different? Would you be different here? Wow, it didn't even get this area at all. I'm kind of surprised about that. Is that my fault? Am I not doing this right? Shoot, you wouldn't have got it at all. Okay. I kind of thought that tool would be, you know, a little bit more accurate on that. It's usually really, really accurate. I like the tool. I'm not bashing the tool at all. I think it's very useful and very, very helpful to use that Mars to fixed ranged volume profile. I'm just surprised that it didn't have anything up there, and the fibs did. So the fibs would have helped you out in that situation. But to answer your question, there are some things that you can do when we're in a choppy range, and I play with them, but there's not really a part of my main strategy so much. But it would be involved taking measurements of this down here to try to get some of these. But then when you zoom out, you know, that's where the harmonic pattern stuff comes into, right? And so just zooming out and following those rules can help you more than anything. Let's see, from this guy, I would do that same move here, swing high to swing low. And if I were looking for a lower low, I mean, if we're on a downtrend and we're going to continue going down, this would be the next higher low area that I'd be looking for. We'd do whatever we do, make a W pattern, blah, 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 come up here. Oh, look, we're going to the moon. Look, it's a flag to the upside. Look, it's a flag to the upside. And I see this happen a lot, because these people don't know, well, they're not looking for this. And that's where you guys have an edge now, compared to some of the other gurus out there that are chasing flags and always looking. If you're always, I'm not trying to bash, but if you're always looking for a pattern, then you've got a bias. If you're always looking for the same patterns, if you find yourself, I keep getting the same patterns, maybe you got a bias. Maybe it's the only ones you can see. I don't know. But that might be a sign that you might be missing some bigger picture stuff. And you need to zoom out and take a look. Like, I see a lot of people drawing flags at resistance, and every once in a while they might get lucky and have one play out, and then, you know, I know exactly what I'm doing. But most of the time there's resistance there or a trend line they're not seeing, and those flags don't work out. And then it comes back and, you know, they've got some, well, you should have seen Head and Shoulders and whatever, you know, they got some reason that it didn't work out. And if you'd been in their group, that you would have known at the very moment to get out of that trade, because, you know, they're going minute by minute anyway. I don't know. But I would, in a situation like, what were we on, Avalanche? If this one were to recover, and it could, you know, when we do these targets, they do not mean we go straight there. That's something else. It's cool when they do, but sometimes there could be a lot of noise before we actually make it up to those areas. It can take a while. We don't know exactly when. There's some little techniques that we can apply to kind of help us out with that. There's even some time things that we can do to kind of help us out. I don't as much get into that. I'm interested in it. I take it little by little because my little brain can only hold so much too. So I have to take time to absorb all this stuff too, as I learn it. But if we're going to make a higher low, these are the areas I'd be looking for. What is this, Avalanche? 46 to 50. I wish you would. I wish you would, Avalanche. Sitting here, at 20? Well, I guess that's okay. Man, I remember Avalanche being around $36 and hanging around there, and I was like, oh, yeah. I missed that. These altcoins just suck. All right, guys. Navi Medina secret sauce. Those peaks are deviations above the range. I know what you were talking about. The peaks. You're talking about. I'm not sure if I'm following what you're talking about. But to get this range, I was just going by this right here. Just the bigger, just because we're within it. And that's why I use this to determine this range. I'm not really sure what you're asking though, or what you're saying. So I'm just trying to explain about what I thought maybe it might pertain to. Looking for a bull flag at the top of the range is asking for trouble. Yes. Looking for a bull flag at the top of any range is asking for trouble. And some people don't see that. They don't see it. And it may be because they're so far in on this small time frame. I don't know. I'm not even trying to pretend I know what they're doing anymore. I'm just trying, I just know when I see it, I'm like, oh man, this dude's going to regret that. And usually does. Feel like I got a new toy for Christmas. I know fibs are awesome. I recommend that you play with them every chance that you get because they're fun. Man, it would really be nice for us to come up here level with $54 for Avalanche. Yeah, these altcoins. All right, guys. I meant why they are extending above the. Okay. Let me go back up to those peaks or deviations above the range. Yeah, I'm not. Yeah, the fixed volume range. Where we go? So is we were pulling this one over. Yeah, and they're above that. Yeah, and I'm not as familiar with you. I mean, I know how to use the tool, but I can't explain why they would be above, and you might know why. I don't have enough experience with that, but I do like this tool. This tool is very helpful for range trading. A lot of people do some really good stuff with it. And when I've messed around with it, I found that it usually correlates with my Fibonacci. That's why it threw me off that it didn't have that. I really expected it to be in that range because usually it does. Using my 786 lines up really good with this area over here. When I've tried it out before, I've found a lot of confluence between that tool and the Fibonacci. Just not on this example. Figures. Thank you, universe, for making me look like a dumbass again. Gotta love that. All right, guys. So let's just, if you got any questions or anything, you can leave them in the comments of the stream video, and I will definitely see them. You can leave them over in the Telegram student chart area, or even over here, I guess, in the chart school, wherever. But I may not remember them or see them, but I can find my comments for these videos and things, and it helps the algorithm too. That's always a plus. I need all the algorithm help I can get. Man, those things are kind of big on my screen, aren't they? But if you got any questions or anything that I didn't explain, or you just want, kind of go back over certain things, because this is a rabbit hole, and it does take a little while to kind of, when it's just kind of thrown there at you to absorb a little bit. But it's not hard. You just kind of play around with it, and then you start seeing it. And then you start seeing the repetition of how they keep repeating, man. When we hit this level, a lot of times we go to this level, or when we do this, sometimes we'll do this or get in this situation. It starts talking to you, and you start seeing, we might start ranging here in this situation, or hey, man, we might actually get a higher high out of this little guy. Or it may take a minute for this one, but it looks like a good set. The fibs are awesome. And the extensions are awesome, and we'll get into that. We still have not even got into the, which I don't use a whole lot, that little 3-point thing I showed at the beginning. You don't see me use that one a lot, but there's two different ways to use that little sucker, and they're both valid. But we can get into that in the next few streams too, if we decide to. I just do a shortcut. All right, guys, thanks for hanging out. I'm going to get ready for the stream tonight, which apparently starts in about 30 minutes. Yay. All right. Thanks for hanging out, guys. I'll see you on the next stream in about 30 minutes. Wasn't that the song that was just on?
Digital whisper says hold tight, but I'm losing faith in the night. When moon crypto, when moon, I'm so tired of waiting. Everyone is capitulating. I keep hanging on to my dream, but nothing is as it seems. Street passions will pursue, but shadows keep blocking my view. When moon crypto, when moon, I'm so tired of waiting. Everyone is capitulating. I keep hanging on to my dream, but nothing is as it seems. Pacing halls of shadows.
See you in a few.
Wandering through force of disbelief, dreams stay